So I'd like to welcome personal finance expert and financial commentator Pattie Lovett-Reid to our show. Pattie is known for giving tips on how people can save money, stretch their incomes. Many of you will recognize Pattie from her days as a former senior financial commentator for CTV News, and she also served as a senior vice president at TD Waterhouse Canada. She's returning to our show after appearing last September. I can't believe it's already been a full year since you were on the show. Welcome to the show, Pattie Lovett-Reid.
Hi there. Thank you for having me. Yeah, you know what? That's a really long time.
Yeah,
Wow. A lot's happened.
I can't believe it's been a year already. What time flies and interesting, different times, I guess, since last time you were on the show. But I'd like to, start just have a very casual conversation about the markets in general. And I guess my first question to you, and a question I get a lot from individual investors, no matter where I go. I was actually down at CP24 the other day, and behind the cameras, producers were coming up to me and asking me this question. And they were basically asking, based on the inflation rate that we just received yesterday, do you think the Bank of Canada has another interest rate increase up their sleeve before the end of the year? And if you were the Bank of Canada, or the Federal Reserve for that matter, would you raise rates again before the end of the year?
Yes, I would. Different central banks. I think the U.S. Federal Reserve has done a really good job. They telegraph. They pretty much always follow suit. Not a lot of surprises, unlike the Bank of Canada, who have been known in the past to surprise us. But when you see an inflation rate of 4%, when you look at mortgage servicing costs up 30%, rent 6%, goods as well as services higher, even if you strip out the volatile components, which would be, of course, energy and food, we're still in August, it's 4.6%. And so if you believe in that 2% target, and if you want the Bank of Canada to have the credibility that it is striving for, the odds went higher on October 25th on the next rate announcement. We could see another 25 basis points. Now, I'm going to put you on the spot. What are your thoughts?
I'm actually of a bit of the opposite mindset. I think that I'd probably pause for a little while just to see how things settle out. Mm-hmm. To me, I think the recent gains in inflation have a lot to do with rising oil prices.
Yes.
Obviously, when you look at core, that's probably more important than the headline number. Mm-hmm. But I guess, which leads me to my next question. I know you speak to a lot of people and investors, small business owners. Are you starting to hear that these higher interest rates are starting to bite them? And I guess in answering my question that you asked me, I think the answer is yes. And so I think we're really starting to see things slow, which is why I would say to possibly pause. But do you think these higher rates are starting to bite?
Yeah, there's no question about it. Alan, I can't remember, at least in my period of time, and I've been around a long time, 90-year amortization rates, where you've got the trigger rate on people with variable rate mortgages exceeding their payments exceeding the interest charge. And, the response is, well, make a lump sum payment, increase your monthly payments, or stretch out your amortization for a period of time, but it can't go on forever. People don't have the financial wiggle room. When I look at some of the odds and you think about this, we've been through a pandemic, higher interest rates, higher inflation, a potential recession, a war going on with geopolitical risk between Russia and Ukraine. There is a 0.25% chance that this happens all at the same time. And so if people are feeling stressed out, there's good reason for them to feel stressed out. You add to it that, yes, we've got oil above $90 US a barrel, 91. And so I kind of think about where we're at. I don't know if a 2% inflation target is realistic anymore. Are we hitting a peak rate right around the globe? I think we're getting close. I do agree with you. We got to pause. We got to pause and allow for that rapid, I think, what was it, 10 interest rate hikes since March of 2022. They do need time to catch up. And so, well, I hope I'm wrong. I hope you're right, because of people who really need that pause to happen. I do see a need to slow down certain areas in this economy to right the ship, so to speak.
And I agree with that for sure. And I think we have a chart. I think we can show that with the Bank of Canada rate as compared to the inflation rate. And obviously now the Bank of Canada rate much higher than the inflation rate.
Right.
One is 5%, 4% inflation rate. So you can see that things definitely, there's some wiggle room there, right? I guess at some point, if the economy were to go into some sort of mild recession, and we did see negative GDP for the second quarter. If we do see another quarter of negative GDP, I think some red bells or some bells would go off, and I think the Bank of Canada would be, a lot of pressure would be on them to do something about that.
Right.
Want to kind of change a little bit over to the stock market.
Sure.
And you've helped a lot of investors manage money when you were at TD. I'm curious, what did you tell investors when the end of August and September rolled around? Obviously, September being the weakest month of the year for investments. Did you tell them, hold tight, let's hold tight, step back for a little bit, see where things go before we add more money? Or were you in there buying on the dip? What do you tell? Because I get, again, another question I get a lot of this time of year.
Yeah, sure. September is notoriously known for being the worst trading month of the year when you look at statistics, followed by October, even though the crash, of course, was in October. But I believe in sticking to a plan. I believe if you believe in dollar cost averaging, and I do, that when the markets are volatile, if you're buying good quality investments and your asset allocation is aligned to who you are as an investor, then you stick with the plan and you continue to see things move forward. So I would argue that yes, a mild recession, it's not like we've never been here before. And it doesn't mean it's going to last forever. And when it does correct itself, things will move forward. And what I've also seen in the past, Alan, is that the market doesn't wave a white flag and say, hey, by the way, now is the time to get back into the market. Things start to move in a preemptive way. It's very forward thinking. It thinks, okay, we are going to see some light at the end of the tunnel, and I want to be there to participate in that. And so that means sticking to my plan. So it can be hard to do. And the same with, I think, sitting in cash and letting your money be idle after what we've seen with taxes and especially inflation. That can be a dangerous place to be as well. You might not think you're taking risk, but there is risk there, of course. So I'm the kind that sticks to the plan.
Great, and obviously great plan. I think, and you never know, right? Sometimes I know a few years ago, August and September actually outperformed, and November, December were disappointing. As we know, November, December tend to be the better months. I guess my last question, I'm going to ask you to put on your fortune telling or telling the future hat, or take out your crystal ball, if you will, because I want to ask you, how do you think the markets are going to fare in the fourth quarter of this year and into 2024? Obviously, with a slowing economy weighing on the markets and, bringing, will that bring down the stock market? Or do you think the stock market can power through a slowing economy? Obviously, we look at the S&P 500 this year up in around 16%. What do you think is in the cards for the remainder of the year and into next year with regards to the stock market?
I think there was a period of time when there was so much talk of the economy slowing down that things got baked into the market. And I'm not suggesting we're going to see broad advancement beyond. I think there's going to be a cautious tone to the market, but that doesn't mean that you shouldn't be in the market. I'm still going to stick to my guns and say it's time in the market, not timing the market. There's no guarantee that we actually will slow down, or if it is, it could be mild and it could be an extended period of time. But the reality is that doesn't mean that there isn't money to be made. If you look at the TSX, think about the energy component with oil trading at the price that it is. The reality is there is still money to be made. It just depends on where you're invested, where you're allocated. And I will also argue, Alan, that it can be about your time horizon. I've gone through a period in my life where it was very much about wealth accumulation. And now we're at a period in our life where we go, okay, we still need to accumulate, but we're into wealth preservation now. So set yourself up for success for the investor that you are, as opposed to saying, I'm not going to be there, because after taxes and inflation, you're not going to keep up your purchasing power if you don't have exposure to the market, at least in my opinion.
Yeah, no, 100%. And investment objectives, time horizon, two of the
All of
most
it.
important things, risk tolerance, all of
Sleep
that.
at night.
The know your client application form, as we call it in the industry. That's always very important. Pattie, thank you so much for being on our show. It's
Are you
always
going to wait another year?
no, definitely not. We will call you sooner than 1 year from now. It's always a pleasure having you on. It's always great to see you
Thank you.
and to talk to you. And I hope you enjoy the rest of the summer, because it looks like the weather's still pretty good out there.
We'll take it. Thanks a lot, Alan. All
All
the
right.
best.
Have a great day. Take care.
Thanks.